It is loading. Give it a second.
We are live, so let's get the let's get the slides going and get started. Thanks so much for joining us, everybody. Great to see you, and happy non-tax day, tax day. We're really excited about having some great guests today. I'm Delegate Brooke Learman. I represent District 46 along with my great teammates, Bill Ferguson, Robin Lewis, and Luke Klippinger. And, we work at the state level to pass and implement policies that affect the entire state, and we are just coming off a big legislative session. So it's great to have you here with us today. I'm really excited to welcome you back to my Briefing with Brooke webinars. Last year, I became a Zoom expert, if you can be one. We hosted over 35 of these webinars last year based on topics that people reached out to me about, topics that were of interest to Marylanders, especially as it related to the pandemic and everything that was going on then. And I'm excited because today I kick off my next series of briefings, which will run, of course, through this spring, summer, and fall. And you can check out the schedule at brookelearman.com/briefingswithbrooke for a full schedule. As we load them up, we'll be putting them there. And I'm always looking for your ideas. So if there are briefings that you are interested in or you would like to see, we would love to know about those because we want to make sure that we're doing briefings that are of interest to you. Each webinar features a briefing on a topic, a different topic. We bring in experts. I am not the experts on all of these topics, so we want to make sure to bring the experts to you. Today, I'm joined by two amazing women who do incredible work making sure that Marylanders can file their taxes. Two folks, Francesca and Robin from the Cash Campaign. The Cash Campaign of Maryland is the result of a merger between the Baltimore Cash Campaign and the Maryland Cash Campaign. It and its statewide network of partners annually prepare 22,000 free tax returns, bringing in $30 million in tax refunds to low-income taxpayers. They also provide free financial education and coaching to over 7,000 residents, and they conduct advocacy on state and federal policies. And I've loved working with them throughout my time in the legislature, both at a statewide advocacy policy level and making sure that constituents who reach out to me for tax help, I can help direct them to Francesca and Robin and the Cash Campaign of Maryland. So why is this so important? Well, there are filing deadlines coming upon us. Of course, April 15th is traditionally our tax day in the United States, but today, let's flip slides. We do not have tax day. Instead, of course, the state tax deadline has been moved to July 15th, and our federal tax deadline this year is May 17th. And I will be following up this briefing with a briefing about business taxes on April 27th. So if you're interested in business taxes, please feel free to join us for that. I also wanted to note that in the recently convened or recently finished legislative session, we made some big changes to tax policy, and we passed, very importantly, the Relief Act to provide both temporary and long-term assistance to Maryland residents. Governor Hogan signed that on February 15th, and our current comptroller, Peter Francho, was also a big advocate in helping us pull together, and his agency and the great folks who work there just announced today that the new individual tax filing forms are ready to go. So that's brand new information for today. You can go to marylandtaxes.gov to make sure that you can access those new filing forms. And it's great at how they keep us updated on all the work they're doing. 2 seconds on the Relief Act, or 2 minutes on the Relief Act that we passed this year. This was HB 612, SB 496. It was signed into law on February 15th and was an emergency economic impact and tax relief package. We directed more than $1 billion to Maryland working families, small businesses, and those who've lost their jobs as a result of the COVID-19 pandemic. It's been a really challenging year for tens of thousands of Marylanders. I know because I work with people in the district, and we see unemployment. We've been helping folks access their unemployment. The Relief Act was a huge effort by the state to infuse the state's economy with $509 million in spending. We became the state with the highest earned income tax credit in the nation now, which really puts cash in the pockets of low-income Maryland taxpayers. It's one of our biggest poverty busting programs at the state level that we can have. We also raised our earned income tax credit for individuals with no children. That means from $100 to $530. Unemployment insurance payments are going to be exempt from state income tax now, and that will keep over $200 million in the pockets of unemployed Marylanders. And Marylanders who qualified for the Earned Income Tax Credit in 2019 were provided with stimulus payments of up to $500. We also are allowing, because of the Relief Act, small businesses to keep their sales tax collections of up to $9,000 over the course of 3 months. And through this bill, we helped up to 100,000 small businesses and nonprofits defer paying unemployment insurance taxes until the first 3 months of 2022, just to make sure we can keep cash flowing and help their cash flow. So I was really excited about that work. And then we followed on with an Earned Income Tax Credit follow-on bill to extend the EITC to all taxpayers and all folks who file returns in the state, including Marylanders who use their ITIN rather than a Social Security number to pay their taxes and to file their tax returns. And that includes 86,000 immigrants who pay taxes each year. So very excited about that. We're only the 3rd state in the country to do that. But without further ado, I want to introduce, if we want to go to the next couple slides, Robin McKinney and Francesca Baptiste. Robin is the co-founder and CEO of the Cash Campaign of Maryland, a nonprofit that improves the financial security of low to moderate income Marylanders. For the past 16 years, Robin has worked in the field of asset building, engaging in fundraising, advocacy, and program and coalition management, including for the Annie Casey Foundation, the East Harbor CDC. She is a board member of Prosperity Now and a member of Maryland's Financial Education and Capability Commission. Francesca, it's great to have you here. Thanks for joining. Francesca is the Director of Tax Partnerships at the Cash Campaign of Maryland. In this role, she provides training and technical support to a network of free tax preparation partners in Maryland and manages other capacity building programs, including the Maryland Community Fellows Program and the Schedule C Step Up, a program designed to educate low-income entrepreneurs and small business owners about their tax compliance requirements. So excited to have both of you on today. Thank you so much for joining. I know they have a great slide presentation to share with us, and we are just gonna get through that as well. So without further ado, I'm gonna turn it over to Robin and Francesca. Thank you.
Great. Thank you so much for having us, Delegate Lehrman. So I think Robin is having a little bit of some audio challenges. Maybe not. Okay, yes. So I'm going to keep us rolling through our slides. So again, my name is Francesca Baptiste. I am the Director of Tax Partnerships at the Cash Campaign of Maryland. And today we're going to talk to you a little bit about economic relief and taxes, what to expect from some recent legislation at both the federal and state level, and how it might impact you. Next slide, please. So Delegate Lehrman gave you a great overview of Cash and who we are, but I just wanted to make sure that I noted that we're a nonprofit organization, and the Cash in our name stands for Creating Assets, Savings, and Hope. And that's really what we're trying to do across all of our programs, which do include free tax preparation, where most of my work lies, but also financial coaching and education, research and advocacy, and practitioner training. Next slide, please.
Sometimes there's a little bit of a delay.
Yeah, I figured.
Next slide.
We'll get there eventually.
Yeah, we'll get there. Keep going.
So I just, the next slide would tell you about some free cash, free tax preparation options for 2021. So this year we did transition to 100% virtual option, where everything is done either virtually or in a drop-off and drop-in method, where clients come into our select locations to drop off their documents and undergo a 15 to 20-minute intake interview while the rest of the tax process is done virtually. However, there's only a month left of the tax season, so available appointments are extremely limited. So we are directing people to the free file software that is available on our website, www.cashmd.org. So if folks do feel comfortable preparing their own taxes, they can access some free tax preparation software again on our website. All right, this would be the next slide as well.
I think his screen, I think his screen froze. So I'm gonna take it over. So you keep going and then I'll share in a second. Keep going. Sorry about that.
Okay, you know, no worries.
Technical difficulties.
Oh yeah, things that we learn via Zoom. Okay, so slide 4 would tell you about the American Rescue, the Rescue Plan Act. This is the first piece of legislation that we're going to talk about tonight. It was signed into law by President Joe Biden on March 11th, 2021. The American Rescue Plan Act, or ARPA, as we affectionately are calling it, is the latest federal COVID-19 relief bill, which includes a myriad of funding provisions intended to provide direct relief to Americans, rescue the American economy, and start combating the coronavirus. There is a lot in this $1.9 trillion package, but we're going to focus on a few specific forms of relief and going to take a closer look at the tax provisions today. So I think I'm on my slide 5. Okay, so some of these changes are retroactive, meaning that they come into effect this year on the 2020 tax return, but there are some that will go into effect next year in 2022 on the tax year 2021 tax return. Next slide, please. So first, and I think most importantly, let's talk about stimulus payments. For a lot of folks have a lot of questions about this one. And so I'm going to refer to this next one as the EIP3. Next slide, please. So economic impact payments were issued by the government to help Americans through the pandemic-induced financial crisis. The federal government has already issued 2 payments previously, referred to as EIP1, which was distributed in April 2020 under the CARES Act, and EIP2, which was issued in December 2020 under the Consolidated Appropriation Act of 2021. And so the new payments that started being issued in March are referred to as the EIP3 under the American Rescue Plan Act. Now, the amounts and eligibility do vary for each of these payments. Determinations are made based on information that is currently available to the IRS from prior year tax returns or through partnerships with certain government agencies like the Social Security Administration or the Veterans Administration. And that information includes adjusted gross income, or AGI, information about dependents, direct deposit information, mailing address, and other items. Next slide, please. Okay, so who is eligible specifically for the EIP3? Generally, if a person is a US citizen or US resident alien, they are eligible so long as they are not as long as they are not dependent of another taxpayer and do have a valid Social Security number. And their adjusted gross income does not exceed $150,000 if they're married and filing a joint return, or if they're filing as a qualifying widow or widower. $112,500 if they're filing as head of household, or $75,000 for individuals with any other filing status, such as single filers or folks that are married filing separate returns. The payments will fully phase out when income reaches $80,000 for single filers, or $120,000 for head of households with 1 child, and $160,000 for joint filers or surviving spouses. So this is definitely different than the previous EIP payments that we have seen before. Who is not eligible? So non-resident aliens, people who can be claimed as dependents or were claimed as dependents. And then again, those with the adjusted gross income above $80,000 for single filers, married filing separately, $120,000 for head of household, and $160,000 for married filing jointly and qualifying widow or widowers. Additionally, payments to estates and trusts are also ineligible, as well as those to deceased individuals. And so the recovery rebate credit is based on 2019 or 2020 returns. I'm sorry, the EIP3 is based on 2019 or 2020 tax returns, whereas the EIP 1 and 2 were based on information that was available on the 2018 or 2019 tax returns. Next slide, please. All right. Additionally, unlike previous EIP payments, everyone is going to receive the same amount. So it's going to be $1,400 for every single person. So again, that's a difference from some of the other EIP payments that have been made that had different amounts for whether or not someone was the main tax filer or if they were a dependent. So everyone gets $1,400 this time around, which is great because a family of 4 can receive up to $5,600 so long as they meet all of the other requirements. On to the EIP3 and eligibility and mixed status filing families. So as with EIP2, joint filers where only one spouse has a social security number will normally get the third payment. So this means that families will now get a payment covering any family member who has a work eligible social security number, again, which is a difference from some of the previous EIP1. For taxpayers who file jointly with their spouse and only one individual has a valid social security number, the spouse with a valid social security number will receive up to $1,400, and they will also receive up to $1,400 for each qualifying dependent claimed on the 2020 tax return. One exception is for active military. If either spouse is an active member of the U.S. Armed Forces at any time during the taxable year, only one spouse needs to have a valid social security number for the couple to receive up to $2,800 for themselves in the third stimulus payment. And of course, if they have any qualifying dependents, they will also be eligible to get a $1,400 payment for those as well. All right, I think back, maybe one more. So payment delivery methods. So how are people getting these funds? In most cases, the payments are being sent automatically via direct deposit, prepaid debit cards, or a paper check. There we go.
There we go. Sorry, I went too fast.
No worries. Or a paper check mailed to the address that the IRS has on file. To date, the Treasury has actually dispersed more than 156 million payments with a value of $372 billion. So they are actively working to make sure that those payments get out and into people's pockets as they need them. Next slide, please. So troubleshooting a missing payment. If you haven't received your EIP3, you might be patient. It might be coming. But one of the first things that you should do is definitely check the IRS Get My Payment tool. This is a tool that can allow you to find out what's going on with your payment, if it's been issued, or if it's still processing. As I said, these payments are actually based on either 2019 or 2020. So if you just filed a 2020 return, it might still be in process as they are working through getting all of the returns that are just being filed processed, because they want to use the most up-to-date information if they have access to it.
This is definitely a website I have sent to constituents. You know, we have gotten certainly, calls saying, how do I find it? And this is a good website. So I'm glad you brought this up. Thank you.
Definitely. And I'm also going to give you some of my tips and tricks, because this is a very finicky tool to use. Unfortunately, it's great when it works, but when it doesn't work, so you want to make sure that you use all caps. That is one of the tricks that we learned. The other thing about your street address is that you might want to check out the USPS address locator to see how your actual street might be abbreviated, because a lot of times they're using what the USPS uses. Even if you always spell out your avenue or street, they don't do that. So you want to make sure that it matches exactly what's in the USPS locator. So you can Google USPS address locator, type in your address, and they'll show you exactly how how they're using it in the USPS system. And usually if you use all caps and you use that address locator, and there's information available for you, because there might not be, but usually as long as you enter all of that stuff, you will be good to go. Another important thing to note is that if you've recently moved, you will need to enter the prior address. So again, the IRS is using information that they have on file. So if you've moved since the last time you actually filed your tax return, you're going to need to enter the address that was on that previous tax return. So just keep those things in mind.
We have one quick question, it looks like. For EIP2, where income dropped significantly from 2018 to 2019, there was a credit issued when filing 2020 taxes to adjust to the reduced AGI. And will that same thing happen? This is a good question. When filing 2021 returns to adjust for people whose AGI dropped when filing 2020 returns?
Yes, that is a great question. And we are going to talk about that in a minute, but the short answer is yes.
Great. And for those of you who don't know, AGI, adjusted gross income. Sorry, I should speak an acronym, right?
Yeah, it's very hard. Yep. Thank you. Okay, next slide, please.
Let's see. Oh, now
all right, it'll get through. So basically, once you've entered the information, if there is information available, it'll say this payment status. We've scheduled your direct deposit to go, on this date to the particular bank account number. If you don't have a bank account number on file with the IRS, it will say we mailed your your payment to X address, or we sent a debit card. They have been using debit cards. So there are a variety of different messages that you can get when you're using this tool. This is one of the good ones. It lets you know that your payment is, on the way, but a lot of times it'll say no information is available. And that again could be because they're still processing a return that you might have just sent, because they do want to use the latest information that is available to them. So I do recommend checking back. Don't check back more than once a day, because they only update the information once a day. So if you've already looked once, it's not going to change for the rest of the day. So wait until tomorrow, and hopefully that status will change for you.
It can be hard to wait, but
yeah, I know, but I'm just telling you, I'm saving you a couple minutes. Don't check again. Okay. The next thing we want to talk about is troubleshooting. If you, didn't get it, there is a way to check on your previous EIP payments. So Get My Payment is only going to give you information for EIP 3, but if you're interested in looking for information on EIP 1 or EIP 2, you are going to need to go to the IRS's website and create a tax account. And basically that is going to tell you a lot of it's going to give you a lot of information. It's going to show your tax records for each year, and it's going to give you your complete EIP history. So all of the different payments. And then you can do a lot of things with this. You can also order transcripts online, which can be important, especially if you've misplaced your tax return. It costs $56 to get a replacement copy of a tax return that from the IRS. So if you've lost it and you don't need to officially submit it for something, you can utilize a transcript. So you can order a tax return transcript, which is going to basically have all of the information line by line on your tax return. Just in case you should have that information. You should always have that information, but it's a good tool to know about just in case, you've lost your tax return and just need some of that information. Also, if you have to file a tax return and don't have access to your original tax documents, so, maybe you're a couple of years behind in filing, and you've lost your W-2s or your 1099s. One really good thing that you can do in your tax account is order an account transcript, and that's going to give you the detail of all the third-party reporting from employers or banks on your behalf for a given year. So the tax account is really, really cool. Not only does it give you your EIP history, but it does let you do a lot of different things. One caveat is that it does ask, in order to create the account, you do have to verify your identity, which can be a little challenging. It does ask, for you to verify whether or not you might have a mortgage or a credit card. And even if you have all of those things, you still might not be able to get access to it because the IRS is very serious about security and identity theft. And so it might be that you may not be able to create a tax account, and it's nothing wrong with you. You're entering all the right information. Just for some reason, there's a barrier. I mean, I couldn't get a tax account for 4 years. I just got my tax account this year, which I'm very excited about. But if you don't get it, try again. But the tax account does have some good information for you. So again, if you're looking for information on your EIP 1 or EIP 2, and what went wrong with it, your tax account, if you can access it, can give you some of that information. Next slide, please. And this is in response to the question that we just had. All of these economic impact payments are technically advances of a refundable tax credit. So this means that eligible people who never got their payments or only received partial payments, because again, this was based on information that the IRS had at the time. So for EIP 1 and 2, that could be 2018, 2019. Same thing for EIP 3, could be 2019, 2020. So the recovery rebate tax credit is the way that you can recover an EIP 1 or 2 if you haven't gotten it. So that is available on your 2020 tax return. It does ask, most software vendors do ask, did you receive your EIP 1? It asks you to enter the amount. So let's say you got $400 for the second payment, and we know that the second payment was $600. So if you're eligible for the additional $200, that credit will reconcile on that 2020 tax return, and you will get EIP 1 or an EIP 2, any missing amounts on your 2020 tax return as part of your refund. And then the same thing is going to happen with EIP 3, but that's going to happen next year on the 2021 tax return. So year 2022. So again, if you haven't received your EIP-3, just be a little patient. As I said, the IRS is still working through releasing all of the payments, but definitely check Get My Payment for your EIP-3 to see where that is. If you do fall into a situation where there's been a payment issued, like, there was an old bank account that was on your previous tax returns, or it says it got mailed or deposited and you haven't received it, you have no idea what happened to it, you definitely want to contact the IRS and start a payment trace, because 2022 is kind of a long way to wait. So if you haven't received it and there's something fishy going on in your Get My Payment, definitely reach out to the IRS and start a payment trace so that they can go about investigating what happened to that payment and hopefully get you on the right track to get you those funds. All right, next slide, please. All right, so some other relevant tax updates. That's all for the EIP. But of course, if you have any questions, definitely feel free to put them in the chat. Next slide, please.
Great. And we're also monitoring Facebook because this is on Facebook Live. So all of you out there on Facebook Live, if you have questions, please put them in the chat and we will try to answer them. Thank you.
Hi, everyone on Facebook. Okay, so as Elegant Learman said earlier, today would have been a really good day for folks like me who prepare taxes. Normally, April 15th is a wonderful day for us. We, breathe this huge sigh of relief that it is over. But unfortunately,
now it's just beginning.
Yeah, unfortunately, given all the challenges of the pandemic this year, the IRS has extended that deadline until May 17th, 2021. So you do have a little bit over a month to get your act together if you haven't filed your taxes. And then the comptroller was even more generous, so with the filing deadline to July 15th, 2021. And so just to note, if there are any outstanding payments, if there are taxes owed, those dates were extended too. So if you owe federal taxes, they're due on May 17th. Maryland state taxes, they're going to be due on July 15th. One of the things that wasn't extended by the IRS was quarterly estimated tax payments. So if you're a small business owner or self-employed, or if you do make quarterly estimated tax payments, that deadline was not extended. So that day is today. So if you need to make payments for the first quarter, today's the day to do so because that was not extended. Next slide, please. All right, so now we're gonna get into all the other tax provisions that were provided by ARPA. So we have a lot of things to talk about, including the earned income tax credit, the child tax credit, the advanced premium tax credit, child independent care credit, AKA the daycare credit, and the taxability of an unemployment income. Next slide, please. All right, so the first thing is the federal earned income tax credit. And so for those of you that are not familiar, the EITC is a unique tax credit that puts money back into the pockets of low and moderate income workers. It encourages and rewards work as well as offsets federal payroll and income taxes. The EITC makes work pay. It is the largest federal anti-poverty tool that's provided by the federal government. And every year it lifts close to 6 million people out of poverty, including 3 million children. So it is a huge, huge, important tax credit. Currently, the federal credit is worth up to $6,600. And because it is a refundable credit, it can either reduce the amount of income taxes owed or increase the amount of an income tax refund. Next slide, please. So how did the American Rescue Plan Act change the earned income tax credit? So several ways. First, it expanded the eligibility. Normally to claim the EITC without claiming children on the tax return, a taxpayer would have to be between the ages of 25 and 65. Now taxpayers over the age of 19, except for full-time students, who are not claiming children are now eligible. And the maximum age limit, which used to be 65 years old, has been eliminated. And this is incredible news. The idea that only folks between 25 and 65 work is sorely outdated, right? We know that there are a lot of folks that are under 25 that are, out here working and supporting themselves, as well as folks that are over 65 that, do need to have a job or, don't actually enjoy being retired, that want to do things. So this was a huge win. We had actually been working on this at the state level for years. We actually got them to eliminate the age penalty about a couple of years ago. So finally, the federal government fell into line and it allowed for this muchly needed credit to be expanded, which is great. Additionally, the ARPA increases the maximum credit and it raises the income limit to qualify. So it increases the credit from, which is currently at the maximum credit is $543. And now the maximum credit can be $1,502, which is an increase of $1,000, which can really make a big difference in someone's life. So that is really, really incredible. The other thing that it did that is important is that it allowed taxpayers to use their earned income from 2019 to calculate their credit for the 2020 tax year in situations where the 2020 earned income was less than their 2019 earned income. So it's the earned income tax credit, right? So you have to have earned income. So that means wages, whether from an employer or being self-employed, passive income. So things like unemployment, retirement income, those things don't count towards that credit. So we know that this is incredibly helpful for the many folks that have experienced job loss due to the pandemic, because they would have passive income, they wouldn't qualify. But now they are able to look back and use that 2019 earned income as a way to allow them to qualify for the tax credit, which is really good. If you didn't know.
Yeah, no, and I think, that's actually several people when we were debating the earned income tax credit provisions, and we were talking about, using 2019 as the look back year. I think it wasn't intuitive for some people. They were like, but I made less in 2020, so I want to claim that. And I was like, no, with the earned income tax credit, you need to have made money. So that's why we want to use your 2019. So I'm glad you clarified that. Thank you.
Yeah, of course. And then the other thing too that ARPA did was it increased the disqualifying investment income limit. So taxpayers are disqualified from receiving the EITC if they receive more than a certain amount of investment income. So thinking about income from interest or dividends or stocks or pensions. So this income limit was increased from $3,650 to $10,000, which again is great news because we know there were a lot of folks who did, cash in on certain pensions or retirement plans because they needed the funds in order to sustain them through the pandemic. So all in all, this was a really, really great and much needed expansion for the folks, in order to survive all these challenges. Next slide, please. Okay, so the child tax credit, or the CTC, is a tax credit for eligible taxpayers with dependent children age 16 and under. Prior to ARPA, families were eligible for a non-refundable tax credit. So again, that means a credit that only reduces the amount of taxes owed of up to $2,000 and up to $1,400 in a refundable credit. So again, credit that reduces taxes owed, but can also add money to the refund if there are funds left over. So a portion of that, again, was non-refundable and other portion was refundable. Next slide, please. So how ARPA changed the child tax credit. So first, it expanded eligibility. So now it applies to children under the age of 18. And we say it this way because that's how it's written in the tax code, but really this means 17 and under. So it gives you an extra year of folks that are claiming and supporting children to get access to this tax credit. The other thing it did was it increased the amount from $2,000 to $3,000 per eligible child under the age of 18. And then for children under the age of 8, the benefit is even further increased to $3,600 per child. And then, as I said before, part of it was refundable, another part was non-refundable, but now it's entirely refundable, which is great. And the other thing that is really interesting that they did was they're allowing for advanced periodic payments. 50% of the credit will be issued starting in July 2021. And it will be reconciled next year on the 2020 tax return. So folks don't have to wait until next year to file in order to get access to that credit. They are going to be getting monthly payments. I know the IRS is furiously trying to figure out how to make that go. And I know people have a lot of questions about how much they're going to get, but all of that is still being worked on. But it's still incredible that they've increased the eligibility, they've expanded it, and these periodic payments are going to do a lot of good for a lot of folks. Next slide, please.
Right, and I'll just say, the child tax credit, I think it was enacted in the late 90s. I want to say 97 or so.
25 years old. Yeah.
Right. Yeah. And, it's just one of these programs that really recognizes the additional cost on families and on individuals of
Absolutely.
raising children. Right. And it's so important in making sure that families have extra income, or extra money in their pocket to help defray those costs. So this is such an important, benefit and provision in the tax code to really help low income families and even middle income families, frankly, to get
Absolutely.
through and be able to pull children out of poverty as well. So thanks. I'm glad you brought this one up. Thank you.
Of course.
Okay. Advanced premium tax credit. Nice.
Uh-huh.
Obamacare.
Loves hearing about
Here we go.
Yes. So for those who purchase health insurance from the healthcare marketplace, so better known as Obamacare, they receive what is called an advanced premium tax credit, or the APTC, and this helps to cover the cost of their health insurance plan. So information about the APTC is reported to taxpayers on a Form 1095-A, and it needs to be reconciled on their tax return. Because as you guessed it, they use previous year tax information to figure out how much the advanced credit should be. So next slide, please. So ARPA, I keep wanting to spell it out, but ARPA, we're going to call it ARPA, has impacted the APTC in the following ways. So normally what happens is that folks will not notify the marketplace that they might have had a change in their life. So changed jobs, made more money, got married, or had a child. And then because that amount is based on the previous year information, unless there's a reporting to the health insurance marketplace, they don't know. And so when it comes time to reconciliation on the tax return the next year, if someone has been found to have received too much advanced premium tax credit, they end up having to pay back the excess. So that's usually what happens. But ARPA came in and said no repayment of the excess advanced premium tax credit, which is great because that can be a couple $100s in either reducing someone's refund or actually making them owe. So the other thing that ARPA did was that it allowed for higher APTC amounts and more affordable premiums. It also increased the income eligibility to include people who have income over 400% of the federal poverty line. I can't remember the number right now, but 400% of the federal poverty line is not a lot of money. So it is going to expand that eligibility for folks and allow more people to get access to the credit and therefore health insurance. So that's really great. Next slide, please. All right, so this is another really important credit. It's the Child Independent Care Credit, aka the daycare credit. And it's a tax credit that's claimed for taxpayers who paid expenses for the care of a qualifying child or individual to allow them to work or look for work. So I am just always stunned by how much daycare costs. It is an astronomical amount that folks, have to pay in order to, go to work or look for work. And it is, one of the biggest expenses that we see for our clients when they come into our tax sites. So expansion of this credit is just huge for these folks. So now it makes the credit fully refundable, whereas before it was a non-refundable credit. So again, could only reduce the taxes owed. Whereas now it's going to be fully refundable, so it can reduce taxes owed, but also translate to extra money on the refund. It increases the dollar limit from eligible expenses from $3,000 to $8,000 for one eligible child, and from $6,000 to $16,000 for two or more eligible children, which is honestly way more in line with what the actual costs of daycare are. So really glad that they have allowed for this expansion. And then the other thing is that they have the exclusion for employer provided childcare assistance. So if an employer does provide their employee with some benefit for childcare, the exclusion has increased from $5,000 to $10,500 and $5,250 for those that are married filing separate. So great expansion in a very much needed area for a lot of folks. Next slide, please. All right, well, I'll tell you what's on there. Oh, okay, there it is. So the last piece of ARPA that's really, really important for us is the unemployment income. So normally unemployment income is treated as taxable income. And so typically those that receive unemployment income should be encouraged to automatically withhold taxes. So opt in when applying, or they should make estimated tax payments to the IRS to cover their tax liability. This year and last, we saw an astronomical number of folks applying for unemployment for the very, very first time, who may not have known or understood that this is actually considered income and is taxable. So the ARPA does allow for taxpayers that have an AGI of under $150,000 to exclude the first $10,200, $24,400 if they're married filing jointly of their benefits. However, for those that do have an AGI over $150,000, these benefits will be fully taxable. Again, I can't stress the importance of this. So many people were collecting unemployment for the very first time that just had no idea that this was taxable income. And, of course, not only didn't plan accordingly, but couldn't plan accordingly, right? Like needed every single dollar of their unemployment in order to, keep things going. So this was really, really a great benefit for those folks in response to all the challenges of the pandemic. One of the really great things for us tax preparers is that we didn't have to amend tax returns for this. We were very, very stressed about having to amend these tax returns, but the IRS has said that they will make these corrections automatically. The only thing is if this exclusion would make a taxpayer newly eligible for a benefit like the earned income tax credit or something like that, that is when an amendment will be required, but more the IRS will fix it on their end in any other case. All right, next slide, please. Okay, so now I'm going to give it over to Robin, who I think has resolved some of the audio issues. Robin, say hello.
Hi, hopefully.
Okay,
Yeah.
There you go. All right.
Great.
I will give it to Robin to talk to you about the Maryland Relief Act.
Great, thanks, Francesca. So as you have all heard here and out into the ether, there's a lot of technical changes that have happened at the federal level, and these were not an accident. Advocates have been talking at Congress, and that you're about to hear, what happens in Maryland for years and years and years. And I think what is so important to remember is that it's through the advocacy of people that have received these credits who have been able to say, this has made a real difference in my life, that the research has shown that the earned income tax credit and the child tax credit really help families, really help workers when they most need it. And so, it's such a reminder to me every year when these big tax deals happen, which in a lot of cases, these improvements are really once in a lifetime or once in a generation historic changes, is why it's so important to marry both tax advocacy as well as implementation. Because as you hear all of these different changes, then the comptroller's office and the IRS and all the tax preparers have to figure out, what does this actually mean for people and how do we walk people through the process? So we are very blessed to do both of those things. At the Maryland level, a couple things happened. So first, as part of the Relief Act, Maryland did its own stimulus payment. So that was $300 to individuals and $500 to families. And it was based on the earned income tax credit. I think this was an incredible smart move by the Maryland General Assembly to really target the state's stimulus dollars to, again, a program that we know works with the Maryland Earned Income Tax Credit. Our credit, which has been in the state since 1987, works as a percentage off the federal credit. And for every few years, we've been able to raise it up a little bit or to do different expansions, like the one Francesca mentioned earlier for single filers. This year, when we say things like a historic expansion, it's like those are all capital letters, bolded exclamation points with like, I don't know, confetti coming out
One
of
of those text messages that when you say happy birthday, it just
exactly. Yeah, it's like it's
Relief Act, BITC.
Yeah, totally. And so, this year, the changes under the Relief Act, which increased both the percentage of the credit, which again just makes it more valuable. It makes it more valuable for both workers with dependents, but also for those single filers. We know that there are a lot of people that are supporting kids but may not be claiming them, or just may not have children yet but still need the support. So foster youth transitioning out of care, non-custodial parents. younger workers just getting started in the workforce, members of the military. These are folks that need that infusion of funds, but the amount for those single workers was so much smaller that it didn't have the lifting you out of poverty impact that we know works so well for families with children. And additionally, not part of the Relief Act, but passed as a separate bill is, again, really historic legislation to make sure that immigrant taxpayers that use an ITIN number, who pay hundreds of millions of dollars in taxes into our state economy every year, are able to access the earned income tax credit. These filers are not able to access the stimulus payment, but they are able to get these credits. And all of these changes go into effect this year and the following 2 years. And early estimates are looking at about $1 billion going to work to low-income workers over the next 3 years. And you just think about that money that's being spent locally. It's being spent in our communities. It's being spent in our small businesses. It's being spent on rent and childcare and all of these things. So the ripple impact of giving money to those workers who need it the most is really life-changing for our entire state, not just for those individuals.
Yep, absolutely. And I think also important to note, of course, is that under the Federal Relief Act and the bills that have been passed, undocumented immigrants and ITIN filers generally have received nothing, right? And so many of them, even some of the documented immigrants, they are they're here, they're working, all of them are working, if you're getting the earned income tax credit, you're working, right? And so these are folks who are paying in, they are paying taxes. And so just really important that they then are able to realize some benefit so that they can take care of their family and feed them and pay expenses, and that money's coming back out into the economy as well. So really just I was one of my proudest votes, absolutely, in support of that legislation, and thank you, both of you, for all your work on it.
Oh, absolutely. And this is one of Maryland is one of, I think we're the third
three states. We're the third state. Yeah,
California and Colorado that have done this expansion. So it really is historic confetti everywhere.
Yeah.
For these workers. And because a lot of this information has been evolving of both the tax, the earned income tax credit expansions, but also at the state level, making some adjustments so that unemployment income is not taxable at the state level. These happened during the tax season, which is really unheard of. Most of the time there may be some last minute changes, but the comptroller's office has some time to make the changes, get the forms updated, get it to the software companies. Tax preparers know what's going on. Well, this year it was all happening midstream. And so the good news is that on the earned income tax credit side, one, the comptroller's office could get those stimulus checks right out. And I know, again, for folks that may still be waiting for them, they're still trying to chase down folks that may have moved or may be incarcerated, as an example, and are still trying to make sure that everyone who's eligible gets those checks. But if someone did file early in the season before this passed, at least on the earned income tax credit side, if they were able to file, then they don't have to do an amended return. The comptroller's office is going to work that out, which really minimizes barriers for folks. And then on the unemployment side, as you mentioned, Delegate, today, those forms are going to be live, which is very exciting for us and for our tax partners who have been holding some of those returns, waiting for all of the calculations and forms to catch up. So that's really exciting.
Absolutely.
I think that is the official end. So on the next slide, if I remember correctly, there's a ton of resources. These are all live links. We can also, you can send this out in any way you want. We can also post this on our website as a link, so that people can access all of these different great resources. Francesca and her team and the rest of the folks who work on our tax program are constantly updating. And so, I really recommend that folks keep checking back on our website, on the comptroller's website, on the IRS website for information. The comptroller's office just launched an EITC assistant calculator that you can put your information in to see if you're eligible under the expansion. But it's changing pretty rapidly. And so we're still waiting for some news about like the child tax credit roll it at the national level. So there's still more news to come. So thank you for having us and highlighting this on what is typically our organizational holiday.
This is usually your signy die, right?
It is, it is. Well, I know, to have signy die and the last day of tax
Yeah.
season in the same week is usually like another big confetti moment, but we're just here.
Yeah, no, that's great. One person did direct message in a question. What is the best place to file Maryland taxes? Should I use an outside resource or the Maryland Comptroller's website? You file more taxes than I do. Of course, you can use the Comptroller's website. Of course, they developed their own tool, so you can go on their website and use their tool. You can also use a private site. Robin or Francesca, do you have any opinion on what's better or whether different people should use different versions?
Well, I think the thing that is important, one, is that if you only need to do your state return, then you have to have your federal return done first in order to do your state return. So certainly you could use the Comptroller's iFile. They also do have some appointments at some of the Comptroller's field offices to do tax prep. There's also on our website, you can see here where folks can prepare their own taxes if you meet those eligibility guidelines. Francesca, I don't know if you have something else that you want to add on that.
Yeah, I just want to say that there are a bunch of free options available. So please use that if you can avail yourself to them. If you do have a more complicated tax situation or aren't really sure, of course, it might be best to see a paid preparer. Just remember a couple of tips. If you are going to see a paid preparer, you just want to make sure that they are legitimate so that they aren't doing things like ghost returns, which means that they don't put their information on a return. It just will say self-prepared. That's usually a pretty red flag. You want to make sure that you can contact them, that they have a number that's in service and can be in service. You can check the AG's the Attorney General's website to see if that person is a reputable tax preparer, if they've had any complaints against them or not, because unfortunately there are some bad actors out here that are doing some bad stuff. So you just want to make sure that they're not on the naughty list. The other thing is you want to make sure that they quote you upfront what you're going to be paying for, exactly what you're going to be paying for. A lot of times folks do tend to pad hidden fees in there, like filing like a storage fee or some crazy thing that's really not necessary. So you want to make sure that you get an accurate breakdown of all the things that you're going to be paying for. And again, of course, I cannot stress enough the reputation and making sure that they are licensed. We are a state that does require that. So making sure that they are doing all of the different continuing education requirements. And again, just making sure that you can contact them if anything goes wrong, because they should be able to assist you if there are any issues. So again, just be very conscious and making sure that you're picking a good person to do your taxes.
That makes sense. All great advice. Thank you. So delighted to have you both. Thank you so much, Robin and Francesca, for all of the amazing work that you do to work with so many Marylanders in so many ways. We will share this PowerPoint on our website, so brookelearman.com/briefings-with-Brooke, where you can find the schedule of briefings. We'll definitely post this there as well. And we have our next briefing next Tuesday, 4/20. We will be talking about marijuana. We just had to do it, I was disappointed we didn't pass legislation this year, but we're going to be talking with Delegate Jazz Lewis, who is the sponsor, about next year and what we can do to prepare and whatnot. So it's great to have you both. Thank you so much for joining, and thanks everybody out there for joining us as well. And we'll see you to talk about business taxes in a few weeks. So thank you, everyone. Take care, keep in touch, and be safe.